What did you take away then collectively from the CPI data, from the Fed, from the way that the markets reacted or didn't react to the data that we saw yesterday? Has it changed your thinking at all?
I'm not sure it has really changed my thinking, if I'm honest. And I think that's why we've seen a not too big a reaction. I'm not sure it's changed the thinking for too many people. And that's both good and bad. It was not just that it doesn't shock, but there's probably enough of it there in the data set that you could extract whatever message you want. As kind of Michelle pointed out, there were certainly some stickier components, but yes, the headline is coming down quite quickly. I think overall, in my view, it kind of goes with, it confirms my priors, which is that inflation is generally pretty sticky out there. And with BlackRock's think on this, that I think that it'll be hard to get inflation below 4% on any kind of foreseeable basis without a major crisis or without a major recession. So I don't think it changed much, and I think a lot has happened in the market since the Fed minutes as well, so they were always going to be a little bit stale.
Yes, and one of the things that's happened is we've had data out of China around exports and imports, and we got some really interesting data in the sense that the export story much stronger than many in the market had anticipated. Credit to your team, though. They certainly saw this one coming. Has that added to our understanding of what's going on in China right now?
Look, it was really, really strong beat. And I think it kind of, some of the recent data of China is kind of going, hey, the recovery is a little bit disappointing. The pandemic, the reopening trade has been a bit disappointing. This is kind of a little bit of a counterpoint going, look, it's not that bad out there. Sure, it may not be the super immediate short-term bull story, but as we've discussed a lot, Anna, this is very much a long-running story that, hey, Chinese economy is okay again, and that it's no longer being broken by policy from the top. And that kind of strength is still under-owned and under-invested globally. So I think this continues to be a story that can run and run and run for many months. It just may not be short-term aggressive, but the data this morning certainly was a positive marker.
What about the Hong Kong tech story? Because that's something that's been, there's been a few false dawns, I suppose, and a lot of people interested in this one. Yesterday, we had the news around Tencent and Prosus and Naspers, what was happening there with the stake in the Tencent business. Today, the FT story around SoftBank's stake in Alibaba. A lot of people questioning holdings, it seems, in big tech right now.
Yeah, it's really interesting that, 2 weeks ago, we were getting so excited about the Alibaba kind of how it was going to break up and IPO different segments, and this was the future of tech, and it was being supported by the government, and suddenly Hong Kong tech stocks had a real chance of like a path forward that was being supported by the government. And I know everyone this is the start of the real kind of sustainable bull market in China tech. Well, again, it's been really, really disappointed, and it shows that foreign investors are still very worried by the China holding story. So I think short term, that is quite upsetting. That is quite negative. Longer term, though, I think this will be a rally that will stay on love for a long period of time, which means, again, going back to the economic story, while it might not be nitro boost on the market side, it's one that can run and run and run as slowly the foreign investors get dragged into a story they didn't love at first.